This fiscal year's budget deficit will be wider and public debt will be higher. That's according to National Treasury. Presenting the third version of the 2025 budget, Finance Minister Enoch Godongwana stated that this was as a result of having to scrap the proposed VAT hike. A consolidated budget deficit of 4.8% of gross domestic product is now forecast for the year. That's wider than the deficit of 4.6% of GDP, which was presented in the budget that was delivered in March. Gross debt is seen stabilizing at 77.4% of GDP in 2025-26. That's up from a previous forecast of 76.2%. Meanwhile, the economy is now expected to expand 1.4% this year. That's down from March's forecast of 1.9% growth. Godongwana says the outlook has been negatively affected by the impact of weaker than expected growth in the fourth quarter of last year, along with persistent logistics constraints, heightened political uncertainty, high borrowing costs and global headwinds. The much weaker economic outlook and the reversal of the VAT increase has weighed on tax revenue projections. The finance minister says more needs to be done to address this.
Compared to March estimates, tax revenue projections have been revised down by 61.9 billion over the 3 years. This reflects the reversal of the VAT increase and the much weaker economic outlook. In this difficult environment, it remains vital that we still take actions to increase revenue to protect and bolster frontline services, while expanding infrastructure investment to drive economic activity. To this end, the budget proposes an inflation-linked increase to the general fuel levy. For the 2025-26 fiscal year, this will only new tax proposal that I'm announcing. This is the first fuel levy increase in 3 years. It means from the 4th of June this year, the general fuel levy will increase by 16 cents per litre and 15 cents per liter of diesel. Unfortunately, this tax measure alone will not close the fiscal gap over the medium term.
Inflation has edged up to 2.8% year-on-year in April. That's from 2.7% the previous month. The latest reading remains outside the Reserve Bank's target band of 3 to 6%, reinforcing calls for further rate cuts this year. The Monetary Policy Committee will announce their decision on rates next week, Thursday. Southern Sun has soaked up robust trading and delivered a 33% jump in full-year headline earnings per share. This was driven largely by the Hotel and Leisure Group's operations in the Western Cape and Gauteng. Both regions benefited from refurbishments at key establishments such as Southern Sun Cullinan and Sandton Towers. But the company did note that KwaZulu-Natal and Mozambique hampered the group's performance. That's as Southern Sun's hotels in Durban took strain due to reduced event activity at the Durban International Convention Centre, and political unrest and rioting in Maputo affected demand in that territory. RFG has reported lower earnings at the halfway stage. The food producer had to contend with a number of challenges during the period, chief amongst them being softer global demand and shifting market dynamics. This resulted in lower revenue in its international segment and a near 12% slump in headline earnings. Nevertheless, an interim dividend of 29.6 cents has been declared. This is the first half-year payout that the group has made as the firm's changed its dividend policy to allow for 2 payouts a year. Roynet has warned of a profit knock. The industrial group expects headline earnings per share to fall by as much as 24% during the half-year period. It cited the deferral of a key contract and lower South African cable sales as reasons for the decline. Roynet has decided to dispose of Blue Nova Energy, its battery storage business, at a net loss due to its continued negative performance. This has also weighed on earnings. The firm will open its books on the 28th of May. The multi-choice Canal Plus deal has received the Competition Commission's nod of approval. It's recommended that the Competition Tribunal approve the proposed acquisition subject to conditions. These include a package of guaranteed public interest commitments proposed by the parties, which supports the participation of firms controlled by historically disadvantaged persons and SMEs in the audio-visual industry. This package will also maintain funding for local general entertainment and sport content. Sanlam and Time Bank have struck a deal. The two entities have announced a joint venture that will focus on unsecured personal loans that will come with a credit life offering. Sanlam says the collaboration with Time Bank is an important component of its credit strategy. That's as the two companies have complementary customer bases and skill sets, and so this offers growth and opportunities. The JSE has given Greencoat Renewables the go-ahead for a secondary listing on the bourse. The European renewable energy infrastructure company will join the ALTEX on the 9th of June. It says coming to market in South Africa allows the firm to broaden its shareholder base and positions the company for future growth. Greencoat is already listed on the alternative investment market and the Euronext growth market. In international news, UK inflation rose more than anticipated in April, particularly in key areas monitored by the Bank of England, prompting investors to expect a slower pace of interest rate cuts. Let's take a look for more detail.
Britain suffered a bigger-than-expected inflation surge in April. It includes areas watched closely by the Bank of England. Investors now believe the bank will have to slow its already gradual pace of interest rate cuts. Inflation leapt to 3.5% in April from 2.6% in March. It's the highest reading since January last year, and the largest increase between 2 months since 2022, when inflation was rocketing above 10%. A jump in airfares over the Easter holiday was a driver of the sharp climb, but the data will add to unease over the outlook for Britain's economy. It grew strongly in early 2025, but is likely to slow in the second half of the year. Finance Minister Rachel Reeves said she was disappointed by the inflation figures. Sterling rose against the US dollar after they were published. The chance of a rate cut in August was cut to 40% by investors, down from 60% before the inflation data. British newspapers had labelled last month as awful April because of increases in gas, electricity and water prices, alongside higher taxes on employers, all of which are likely to push up prices. Looking ahead, the Bank of England has predicted that inflation will hit 3.7% by September.
And oil prices rose more than 1% after reports Israel is preparing a strike on Iranian nuclear facilities, raising fears that a conflict could upset supply availability in the key Middle East producing region. Here's more detail in this report.
Oil prices jumped Wednesday over fears that Israel could be planning an attack on Iran's nuclear facilities. International benchmark Brent crude was up around 1.5% by mid-afternoon in Asia. That followed reports by CNN that Israel is planning an airstrike. It cited US officials as a source. The report said Israel had been observed positioning munitions at air bases and conducting what could be a preparatory exercise. But CNN said it wasn't clear if Israel had made a final decision to strike. Traders fear any attack could threaten crude supplies from Iran, the third largest producer in the OPEC group of oil exporters. There are also concerns that Tehran could retaliate by blocking the movement of tankers through the Gulf. That's a vital supply route for crude from Saudi Arabia, Kuwait and other nations. The US and Iran have been holding talks on the future of the country's nuclear program, with Donald Trump at times suggesting a deal could be close. However, Iranian Supreme Leader Ayatollah Ali Khamenei this week cast doubt on that. He said he didn't think the talks would bring any result. Even if there is a deal, the CNN report says that could make an Israeli airstrike more likely, if it did not include the removal of Iran's uranium stockpile. Other factors helped limit the rise for oil prices on Wednesday, however. Market sources said that included signs of stronger supply, with US stocks of crude reportedly rising strongly last week.